In this video, traders are going to have top trading quotes related to technical analysis. Stay tuned. Hey traders, a warm welcome to you. Okay, so top trading quotes that are related to technical analysis. If you don't know technical analysis, I'm sure you do, but if you don't, if you're new here, that is studying charts, chart patterns, everything to do with charts, candlesticks, bars, all this kind of stuff, indicators, to give us an opinion or a hypothesis on what could happen in the future. Now, one quote I haven't put on here, which I remember vividly from Schwartz in the book Pitbull. And if you haven't checked out my video, talk about recommended books for trading, Pitbull is definitely one of them. But he says that there is a fallacy, well, not a fallacy, there's a silly comment, as he says, which is, I've never met a rich technician. And you hear this quite a lot, people who say technical analysis is useless, doesn't work. And his comment was, which is absolute nonsense, or words to that effect, because basically he got rich from reading charts, analysing charts, and making his decision based on charts. And I'm inclined to agree with his response, because majority of traders are using technical analysis in one form or another to make decisions. They're not using it like most people do it. They're mixing it up with other things. They've got their own take on it, but ultimately that is their primary tool. Anyway, let's go to the some of the quotes. First one is from John Murphy. This one, John Murphy, popular books he's written on technical analysis, candlesticks and stuff like that. So technical analysis is a skill that improves with experience and study. I don't know about you, but when I first started trading, I went on a technical analysis course in London. This must have been 2002, 3, 1 maybe, something like that. Went on this course, learned about technical analysis. It was a one-day course. The guy was great, really interesting. And I thought, you know what, this is amazing. Now I can just literally go and use these tools, stochastics, moving averages, and I'm going to make loads of money. Of course, it doesn't work like that. It's how you implement those skills that actually makes the difference. You can't just trade head and shoulders all day long. You can't just trade overbought on the short side. You have to add some extra dimension of edge in it. There's no edge in that alone. So this really is a good comment in saying, hey, as you start to understand the concept of it, then you start to add different things and different structure to how that's perceived, where the actual pattern occurs, when it occurs, under what circumstances, what's the catalyst. All these things add to it together, and I've talked on that before, but I'm going to go into massive depth into that in later videos. So hit the subscribe button if you want to find out more about that kind of stuff, because I really want to dig into that at some point on the channel. So anyway, digressing. Number 2, guys, I never use valuation to time the market. I love this one. I never use valuation to time the market. I use TA for my timing. Valuation tells me how far it will go after a catalyst. This is a great one, and this resonates perfectly with my style and strategy. Got a catalyst, you've got a fundamental idea on what's going. Now valuation, not so much, you're not really interested in the valuation in something, but a catalyst causes something to happen, and then your thesis and theory in this example is how far it will go. So let's just think of something that's happening right now. People think Tesla is massively overvalued. Agree or disagree, whatever. So people are on the short side, so they sit on the short side, but they're having to sit through that over these years. It's not going anywhere, it's going against them. They're having to pay costs to borrow the stock, all this kind of stuff. And yes, the thesis, if proved correct, means that Tesla will be valued at 1/10 of what it is, or whatever the thesis may be. But in this quote, which is perfect, by Stanley Druckenmiller, he's saying, hey, you know what, valuation gives me an idea of where it could go, but I need that catalyst. I need something to indicate, some technical pattern that there's a trigger, it's going to happen. And that's exactly the kind of strategy we've talked about before, and something, again, I'm going to dig into lots more on the channel here. My strategy specifically being, you know, I need a catalyst. Hey, I may well think that the price is going to $100, but unless I see a technical pattern that I can get into and I have a good quantified risk reward on, then it could drift up there and tag it without me involved. I need that catalyst, and this is exactly what Stanley's saying here. Okay, number 3, guys, weekly charts are more important than daily charts in terms of signals. So I've added the signals because that's exactly what he was talking about here. I've just sort of truncate the quote. So John Murphy talked about that. Makes perfect sense, because if you're getting a selling pattern on a weekly, there's more participants, more volume, more liquidity over more time rather than a daily chart. And I think that's the same as well for day trading. If you've got something on 1 minute, it's got far less kind of weight to it as it has got a 15 or an hourly, because an hourly chart, let's say you've got a bullish engulfing but a candlestick pattern on a 1 minute, pretty meaningless. On an hour, maybe it's a bit more weight to it because it's taken something longer to do it. There's more liquidity in there, more volume, more trades. I've done more people have agreed that that's going to happen, or that candlestick pattern has occurred from the aggregate of all the orders. Number 4, short-term volatility is greatest at turning points and diminishes as a trend becomes established. That's George Soros. So what Soros is saying here is literally at turning points we get extreme volatility where we have that supply demand shifting massively. You've got big supply coming in, turns to demand. Supply demand would be that way around, wouldn't it? Supply coming in, then demand just turns, and the volatility shifts as people are coming out, getting in quickly, making emotional decisions at those extremes. If you can kind of imagine, if I can just fit it in here, hopefully you guys can see at the top portion and the bottom portion of the trend, everyone's reasonably happy in that middle bit, right? But as we start to get to the top or the bottom of it, people are starting to get a bit more emotional. It's moved a long way. Buyers are really excited in the upside, sellers are hurting if they're on the short side, and vice versa. So we get more emotional order flow. When we get emotional order flow, we get volatility. So those are 4 top trading quotes regarding or relating to technical analysis. If you've got any others, stick in the comment section below. If you like this kind of stuff, give it a thumbs up, and I appreciate your subscription, guys. Good trade, take care. See you next one. Bye-bye.